During the Asian trading session on Monday, the global precious metals market saw significant volatility. Spot gold halted its prior consecutive uptrend and staged a notable pullback. Gold prices once slumped by over 1% intraday, breaking below the key psychological level of $4,500 and hitting an intraday low of $4,472. 1 per ounce, currently trading at $4,505 per ounce, down nearly $27 from the all-time high of $4,532 per ounce touched last Friday. On the fundamental front, the concentrated release of short-term profit-taking pressure was the primary driver behind the gold price pullback. Gold had kept surging to a record high previously, accumulating a large amount of profitable positions against the backdrop of rising demand for profit-taking among capital at year-end. Gold prices were vulnerable to short-term selling pressure. The core logic underpinning the long-term bullish trend for gold remains fundamentally unchanged. On the monetary policy front, the U.S. November CPI and core CPI data both came in lower than expected, further easing inflationary pressures and reinforcing market expectations of interest rate cuts by the Federal Reserve in 2026, coupled with the U.S. President's indication to nominate an ultra-dovish candidate as the new Federal Reserve Chair. Market expectations for accommodative monetary policy continued to heat up, offering solid medium to long-term support for gold prices. Geopolitical tensions and the de-dollarization trend persist, with continuous gold purchases by global central banks acting as a strong bulwark for gold prices. Morgan forecasts that global central banks will purchase an average of 70 metric tons of gold per month in 2026, which is set to drive gold prices towards the $5,000 mark and even potentially hit $6.0 in the long run. Analysis of gold's short-term technical outlook. From the daily chart perspective, gold prices retreated sharply today and broke below the support of the 5-day moving average, forming a bearish candlestick with a long upper shadow on the daily time frame. This pattern signals heavy selling pressure at elevated levels and a temporary exhaustion of short-term upward momentum. In terms of the moving average system, although the bullish alignment pattern is still intact, gold prices are likely to test the support of the 10-day moving average. After the breakdown of the 5-day moving average support, a breach below the 10-day moving average may trigger a further pullback. The Relative Strength Index RSI has retreated sharply from the prior overbought territory, around the 75 level, to approximately 65, with partial relief of overbought pressure, yet the index still stays in a neutral to strong range, implying limited room for a corrective pullback. In terms of key price levels, immediate resistance is concentrated in the $4,500, $4,510 range, a former key support zone that has now reversed to act as a resistance band. Failure to reclaim the $4,500 level swiftly would cap the upside potential for a short-term rebound. On the downside, support levels are well defined. The primary strong supports zone lies at $4,480 to $4,485, corresponding to the 10-day moving average with solid supportive strength. The secondary support is at $4,450, $4,460, near last Friday's intraday low. A break below this level may trigger a deeper correction and thus warrants close attention. All content above is for reference only and does not constitute any investment advice. Investors assume full responsibility for profits and losses incurred from any trading activities made based on this information. Please subscribe, like, and share. Thanks for watching.